Hello and welcome to the Estate Planning Toolbox. Thanks for taking some time out of your day to check out everything we have going on here. My name is John Connor and I am an attorney in the Trust and Estates Group of Graves, Doherty, Heron & Moody, a law firm located in downtown Austin, Texas. This podcast is a client-focused podcast covering various estate planning topics, including wills and trusts, powers of attorney, corporate entities such as LLCs and limited partnerships, probate administration, and everything in between. Thanks very much for stopping by. Hello everyone, welcome back to this week's episode of the Estate Planning Toolbox. If you can believe it, this is episode 13. The Estate Planning Toolbox is now a moody teenager of a podcast. I can't quite believe it myself, but yet here we are. And today we're going to be continuing our discussion of the many ways to make a gift, and we will be discussing gifts to charities. Before we do that though, here is today's movie quote of the day.
Charlie, stay where you are. Charlie, would you listen to me? Stay up there.
He is Santa. You killed him.
Did not. And he's not Santa.
Well, he was.
Again, same hint as they have been all month. That is from a Christmas movie. And if you don't know what movie it's from, stick around until the end of the podcast and I will reveal the answer. So as I mentioned, today we're going to be talking about gifts to charities. And before we jump in talking about the different gifts we can make to charities, I want to make sure we have an understanding of the income tax deductions and estate and gift tax deductions that are available whenever we actually make a gift to a charity. Generally speaking, from an income tax perspective, when you make a gift to a public charity, you have a couple of different deductions. One, if you make a gift of cash, and that's only cash, the deduction is actually 60%. And that's actually an increase from last year, and that is due in part to President Trump's Tax Act that came into effect in January. However, do keep in mind, if you make a gift of any other kind of property, real property, or anything other than cash to any other kind of charity, that 60% deduction is reduced to a 50% deduction. If you make a gift to a public charity of long-term capital gain property, that might be something like a residence or other real property or stocks or any other kind of investment asset that you have owned for more than 1 year, then gifts of those assets to public charities will get a 30% deduction for income tax purposes. On the other hand, if you have a private charity or a private foundation, gifts of cash or other ordinary income tax assets to a private foundation will result in you receiving a 30% deduction for income tax purposes, while gifts of long-term capital gain property to a private charity or private foundation will result in you receiving an income tax deduction of up to 20%. Do keep in mind, in terms of all these income tax deductions, that you will need to discuss them with your CPA whenever the time comes for you to do your annual income tax return. Now, in terms of estate and gift tax deductions, generally speaking, they are both unlimited. If you make a gift to a charity, yes, it is quote-unquote taxable. You will need to do a gift tax return, but the gift tax deductions for gifts to charities is unlimited, so even though you will need to file a gift tax return to report those gifts, you won't actually owe any gift tax. Now, as to the estate tax for gifts that you make to charities, maybe in your will or through another vehicle after your death, there is also an unlimited charitable deduction in that case for estate taxes. You'll need to keep a couple of things in mind though. One, the property that you are claiming a charitable deduction for must be included in the decedent's gross estate for estate tax purposes. And number two, the deduction cannot actually exceed the value of the property in the gross estate. So obviously you're not able to claim a deduction for more than what you actually owe the federal government if you do owe an estate tax, but it may be that you are able to reduce your estate tax burden down to zero. Now, with that basic understanding of the income tax deductions and the estate and gift tax deductions that are available when we make gifts to charities, let's turn now and talk about making outright gifts to charities. Pretty straightforward here and not going to spend a lot of time discussing it. You can really make a gift to charities of essentially any asset. You can give cash, you can give real estate, you could give oil and gas interests, you could give stocks, maybe you have Bitcoin. You could certainly make a gift to charity of your Bitcoin if that's something you'd be inclined to do. As we discussed, you will need to file a gift tax return to report that gifts, but there is an unlimited gift tax charitable deduction, and you will get a corresponding income tax deduction depending on what the asset was that you gave, its value, and whether you gave that asset to a public charity or a private foundation. You can also make outright gifts to charities in your will. This would be a testamentary gift to a charity. As we just discussed, the estate tax charitable deduction is unlimited, but you're not able to deduct more than what is actually included in your gross estate. And that really is all that we need to discuss in terms of outright gifts. You can make outright gifts. You have an unlimited gift tax deduction, an unlimited estate tax deduction. You'll get an income tax benefit. Just be sure that you keep an eye on the assets that you're giving, their value, and to what type of charity you're giving them to, and be sure to discuss all that with your CPA. Another vehicle that you can consider for making a charitable gift is a trust. Now, generally speaking, if a trust has both a charitable beneficiary and a non-charitable beneficiary, that's called a split interest gift, and those types of gifts generally do not qualify for any kind of deductions. However, there's a few exceptions that the Internal Revenue Code provides for, but the two biggest ones are the charitable lead trust and the charitable remainder trust. And we're going to go through those now at a very 30,000-foot view, so that you'll have a basic understanding of how those trusts work and can have a good discussion with your estate planner if you want to utilize either of these vehicles for charitable giving purposes. We'll start with a charitable remainder trust. And as the name kind of implies, this is when you have a charity that is the remainder beneficiary of a trust, meaning they are not the initial primary beneficiary. And the way that these are set up and work is like this. First, an individual will donate assets to the charity. Really, they're going to put it inside of a trust. But that individual retains an interest in the donated assets, either because they are a beneficiary of the trust or they provide another individual with an interest in those donated assets by making them the beneficiary of the trust. And that initial non-charitable primary interest will only last for a specific period of time. Once the trust is set up, the non-charitable beneficiary will receive a stream of payments for a specified period of time. If that non-charitable beneficiary is an individual, then that initial primary term of the charitable remainder trust will either be for the duration of the beneficiary's life or for a term not to exceed 20 years. If that initial non-charitable beneficiary is not an individual, then the initial primary term of that charitable remainder trust must be for a term of years not to exceed 20 years. Once that initial primary term has ended, any remaining assets are then going to be transferred to the charitable beneficiary and the trust will effectively be closed. Once the trust is set up, the donor will receive an income tax deduction and a corresponding gift tax or estate tax deduction. The amount of the deduction is going to be based on the present value of the remainder interest that ultimately passes to the charity. And there are two main types of charitable remainder trusts. The first is the charitable remainder annuity trust, or CRAT, and this is when the stream of payments paid to the non-charitable beneficiary is a set amount each year. The other primary type of charitable remainder trusts are charitable remainder unit trusts, or CRUT. And this is when the stream of payments to the non-charitable beneficiary is determined each year based on a percentage of the fair market value of the trust's assets, meaning that the amount received by the non-charitable beneficiary on a year-to-year basis is going to fluctuate. If the fair market value of the assets goes down, then they'll receive less. If, on the other hand, the fair market value of the assets goes up, then the non-charitable beneficiary will receive more in that calendar year. The charitable lead trust, as its name implies, is a trust in which the initial primary beneficiary is a charity, with the remainder beneficiaries being a non-charitable beneficiary. And the way that these get set up and work is this. First, the donor will transfer property to an irrevocable trust. The trust will pay a designated charity a stream of payments for a specified period of time. Now, unlike the charitable remainder trust, there is no time limit on how long a charitable lead trust can last. It could last for a term of years or for the life of an individual, or however you and your estate planner decide to set it up. Once that primary period is over, the donor will either receive the property back, or the property that was transferred to that charitable lead trust will be transferred to another non-charitable beneficiary. Just like the charitable remainder trust, the donor will receive an income tax deduction and a corresponding gift tax or estate tax deduction, and those deductions are going to be based on the actuarial value of the charity's interest. Also, like the charitable remainder trust, there are two primary variations of the charitable lead trust. The first one is the charitable lead annuity trust, or CLAT, and in the CLAT, the initial primary beneficiary, the charitable beneficiary, will receive a set amount each year. And similar to the charitable remainder trust, that amount can be set at whatever you want to set it at. The other primary type of charitable lead trust is the charitable lead unit trust, or CLUT. And in this case, the initial primary charitable beneficiary will receive an amount each year paid from the trust that is based on a percentage of the net fair market value of the trust's assets, which means that the amount received by the charitable beneficiary will fluctuate from year to year. If the assets go up, the charity receives more for a given year, but if they go down the next year, then in that year, the charity will actually receive less. So there is really a 30,000-foot view of giving to charities, both outright gifts and gifts in trust. As a summary, there are income tax deductions and estate and gift tax deductions available whenever you make a gift to charities. Do keep in mind there are limits on the income tax deductions that are based on the types of asset you give and the types of charities that you're giving to. Outright gifts to charities work great. They love to receive them and they're always happy to receive them. But gifts in trust are also an option, but you'll want to make sure you follow all the rules to make sure you have a good charitable lead trust or a good working charitable remainder trust. So that is it for today's discussion. Before we go, here's the answer to today's movie quote of the day, and it is from the Santa Claus.
You got him!
Charlie, stay where you are. Charlie, would you listen to me? Stay up there.
He is Santa! You killed him!
Did not. And he's not Santa.
Well, he was.
That is just one of my very favorite Christmas movies. In fact, it might be my favorite Christmas movie, and I hope that it is one that you have seen time and time again. So that's going to do it for today's episode of the Estate Planning Toolbox, but be sure to check back in soon as we will be concluding our series on the many ways to make a gift. Thank you all very much for stopping by.